Investing in equities can sometimes feel like a roller coaster ride. When markets turn volatile, how can you make sense of these up and downs while working towards your long-term financial goals? The key is in choosing the right investment strategy, one that can not only manage the market volatility but also drive consistent growth. Popularly, investment decisions are influenced by emotions. But instead of letting emotions get the better of you, you can use volatility as an opportunity to optimize gains. Let's talk about the Aditya Birla Sun Life Balanced Advantage Fund, which has been successfully navigating the market ups and downs for 25 years. This fund dynamically balances its portfolio between equity and fixed income securities based on market valuations, aiming to generate reasonable returns with relatively lower volatility. Our asset allocation model considers both counter-cyclical and pro-cyclical factors. There are two counter-cyclical factors that the model considers: valuation and past experience. When valuations are rich and the past experience is also very good, the model automatically suggests to tone down the equity allocation. On the other hand, we have one pro-cyclical factor where we look at the breadth of markets and gauge momentum in the market. As long as the momentum is fine in markets, these pro-cyclical factors increase the equity allocation. This interplay between counter-cyclical factors and pro-cyclical factors is done on a daily basis to ensure that as and when opportunity comes, the fund is very quick and agile to capitalize on the same, even as it remains disciplined to keep booking profits when valuation and past experience continue to be elevated. The band of net equity in the ABSL Balanced Advantage Fund varies from 30% to 80% and is diversified across a range of businesses in a prudent manner with a larger tilt to blue chip companies. The allocation to the fixed income securities is to provide a strong foundation of base returns which are less correlated to equity movements. In case the model suggests equity allocation to less than 65%, we deploy arbitrage strategies to qualify for equity fund taxation on the overall fund. This smart, adaptive strategy and an agile management of net equity exposure has helped the Aditya Birla Sun Life Balanced Advantage Fund deliver a smoother investment experience with lower volatility. Take the 2020 pandemic. While markets were dropping, the fund shifted to the lower risk assets, preserving the investor capital. As valuations became cheap, the fund adjusted again, capturing gains on the rebound. This fund is suitable for first-time investors who are often confused with the plethora of options of various asset classes. The fund automatically shifts between equity and debt, especially in a tax-efficient manner. The fund is also suitable for investors with significant assets who want lesser volatility in their wealth profiles. Lastly, it's suitable for investors who desire relatively more stable wealth creation over the medium term. To summarize, timing the equity market is difficult when emotions often get the better of investors. Yet, it is important to have a balanced asset allocation and to stay invested. The Aditya Birla Sun Life Balanced Advantage Fund is a well-balanced risk-reward proposition that has delivered lower drawdowns across market cycles compared to the broader index and has posted a faster recovery too. Actively managed equity portfolio enhances the return potential with a medium to long-term investment horizon. Lastly, equity taxation is applicable while investing in this class, which are higher tax rates than equity. With a history of 25 years in successfully balancing risk and reward, the Aditya Birla Sun Life Balanced Advantage Fund is here to support you in every step of your wealth building journey.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.